Hi, my name is Tom Angell. I'm principal in charge of Rothstein Kass's private equity practice.
Why don't we start with you telling me a little bit about Rothstein Kass and your role there?
Sure. Rothstein Kass is a national firm which handles alternative investment clients. So we handle hedge funds, private equity funds, and venture capital funds.
What do you think the biggest challenges facing private equity funds today as a result of regulation?
Well, I think the first thing that's really important that they have to really get a handle on is the fact that they're going from a private entity to now a regulated entity. So that's a big mindset change, and a lot of things go with that. So one of the things they really have to do is understand the investment advisors rules as well as the Dodd-Frank rules. So that entails dealing with a chief compliance officer, having policies and procedures in place, so whether it's valuation policies, operational policy issues, compliance policy issues, a lot of things that they really haven't done before that they're going to have to take a look at to try and do now going down the road.
Can you just talk a little bit about what types of stress compliance causes for the private equity firms?
Well, it comes in a number of things. One is cost. If you're talking about minimum fund that has to register is $150 million in regulatory assets under management. That type of fund doesn't really have the fees to really build an infrastructure. So now you're dealing with cost on outsourcing for consultants to be able to help you, guide you through the paths that you need to go through. You might have to outsource, for instance, an HR function in order to build an HR compliance manual. So a lot of different things that now they're focusing on to really deal with this, as opposed to focusing on what they want to do, which is make investments and sell their portfolio companies. The larger funds, over $2 billion, $3-4 billion, probably have that infrastructure in place. So they probably already have a chief compliance officer. So they're probably doing a lot of the things that they need to do. Is just kind of more information gathering for forms that they need to file. Form PF, which is for any fund that's over $2 billion and under regulatory assets under management. That particular firm is going to have to put a lot of information together, and a lot of it is about their portfolio companies, and they don't have that readily available. So now they've got to pull all that data from various sources and have that ready, and that's going to be a little bit of a trial for them to really understand what they need to do in order to get all that information in time.
Big job.
Yes.
Let's switch gears a little bit and talk about Rothstein Kass. You guys recently did a survey, and I want to talk a little bit about the findings there.
Okay.
So the survey actually indicated that private equity firms are feeling more optimistic in 2012 than they were in 2011. Can you talk a little bit about why that
Sure.
would be?
Yeah, we do an annual survey every year, usually about January, February. We survey firms. This year we surveyed 293 firms, and the optimism was that they thought the general economy was getting better, so they felt more optimistic about the economy. The other thing they felt optimistic about was to be able to exit some of their portfolio companies. So they think that because of the economy being better, and also other firms, maybe private equity firms, having some additional capital, may look to buy maybe some of their undervalued companies. So there's optimism in that way. The other thing is they think that there'll be better deals out there. So again, partly a market issue, but the other reason is they think that a lot of deals may come forward. So end of 2010, we had a lot of companies that were worried about the Bush tax cuts going away.
Right.
So they came out, and we had probably the biggest quarter that we've had in a long time. Well, at the end of this year, again, the Bush tax cuts are expected to expire. So you're going to go from a 15% to a 20% rate. On top of that, Obamacare kicks in, and so therefore there's a 3.8% Medicare tax on top of the increase in tax. So now you're going from 15% to 23.8%. So companies may say, well, you know what, if I'm going to sell, it might be better to do it this year than next year with that change, right?
Gotcha. Your findings also indicated that while firms are more optimistic, there is still some things that they're concerned about. Can you talk a little bit about the concerns?
Sure. They're concerned about competition. So part of the competition is coming from strategics. Strategics, you've seen in the news for a long time that corporations are just sitting on cash. They're just waiting. They don't know what to do. They're waiting till they feel comfortable. Well, if the economy's starting to pick up and the stock market's starting to pick up, then maybe people will be more willing to sell, and therefore the strategics can make deals. And strategics typically can pay more because they can get economies of scale. There's things that they can cut. Maybe plants are in the same area, so they can, close a plant down. So that's something that worries them. Pension plans and also institutions. We heard earlier in the session yesterday, one of the speakers was from the Ontario Teachers Pension Plan. They have their own private equity fund they set up, so that she runs, and they have $12 billion allocated, not specifically to the fund, but within private equity. But they run their own fund. That's competition because pensions have a longer horizon. Private equity firms run about 10 years based upon their docs. It's usually 10 years, whereas pensions are just a longer-term horizon. So if you have a longer-term horizon, you can probably make a better deal, maybe pay a little more. And again, that's competition for them. But the biggest thing we saw in the survey was regulation. Regulation, scares them. The unknown. And we did the survey last year. It wasn't as much of an issue, but I think part of what we talked about earlier was maybe they thought it wasn't going to happen. Well, now we're there, and they have to register, and now they really have to deal with this, and so that's a concern.